First of all, most financial advisors state that you need to work on your emergency fund first before you consider making extra payments on your mortgage. Hello and welcome. I'm glad to see you again. I want to talk to you about ways to save on your mortgage. Yeah, ways to take years off your mortgage payments. In fact, you do get a tax credit usually from the interest you pay on your mortgage every year. And you should consider if you paid your house off or in half, that means you pay it sooner. Would that be advantageous to you? You need a budget. Remember, we talk about this almost every time. You need a budget. You got to budget this, okay? Consider auto payments. If you put your mortgage on auto payment with the extra, it's easier that way. Also, you're going to have to change some of your lifestyle. Not eat out as much so you could have this extra money to pay on the house. You get it? You're going to have to cut back a bit. Are you willing to do that? And if those are non-negotiables, your entertainment, your eating out, then this is probably not the thing for you to do. Finally, make it a written goal. Write it out. Make a vision board. Think of the things you will be able to do if you pay your mortgage off. Will you be able to retire sooner? Will you be able to go on vacations when it's done? Is it just peace of mind? But write it out. Make it a goal. Put the steps in play. Write out the steps. That makes it more concrete and real to you. Before we begin, we need to define some terms. Okay? A principal is the amount loaned to you by your bank in order for you to buy your home. The interest is the amount the bank charges for loaning you the principal. See that? They work together. When you purchase a home, you are given a mortgage amortization table, meaning it's going to have the schedule for every month for the next 30 years on average, how much you're going to pay of principal and interest. So you're going to get a table of all that so you can see it. Long term equals lower payments, more interest paid. Short term equals lower interest paid. Principal paid off sooner, house paid off sooner. You get it? The more I pay on the principal, the less interest I pay. This saves me money, but it also shortens the amount of time on my mortgage. In some cases, depending on how I do it, I can take years off. First, let's go over an example of how they arrive at your payment monthly. So I purchased the house for $400,000. I give a down payment of 5%, which would be $20,000. So I am borrowing $380,000. And my interest rate, 7%. That's about what it is right now. If you go to a bank and they give you a real good deal, 7%. So my payment would be $2,528 a month. Okay? The first way is to split your payment in half. You can send in half an extra payment. That would be $1,264 if we use that payment amount that we mentioned earlier. That means you could pay your house off in 12 years and 8 months. You would essentially knock off 18 years in payments. You would save yourself a lot of money. Another way would be if you simply double your mortgage payment, you will pay it off in 8 years. Yeah. So what you're going to do is pay your regular mortgage payment, which you're obligated to pay, and then pay that same amount again just to the principal. And then you will pay the house off in 8 years. Number 3, you can make one extra payment a year. The way you do that is we take that monthly payment of $2,528. That's what we pay monthly, remember? We divide that by 12 because there's 12 months in a year. And that will give us the extra principal payment we need to make monthly. That's about $210. If we do that, we would make an extra payment a year in principal. And I take off about 6 years, 6.5 years, 6 years and 10 months off my payment. So then I could pay my house off in 24 years instead of 30 years. Okay? What does this get me in the end? Peace of mind, security financially, knowing that all I need to pay are my taxes and the repairs on my home. I don't have to worry about someone coming to get my home because I didn't make a mortgage payment. That's done. But again, as I stated before, you need to decide if that is a good thing for you. Does that work for you financially? So you might want to talk to a professional and work that out. What does that look like? What do we gotta not do? What do we need to put to the side? But again, I just want to remind you, if you set it up as a direct payment every month, then you just, set it and forget it. I hope something I said was helpful to you. If not only that it got you thinking about paying your house off sooner. As always, God bless you and keep the faith.